Higher oil prices, higher energy prices. The price of oil has been steadily melting lower since June, despite geopolitical risks, despite China reopening, and definitely the economic data supports a surge. We're still kind of in this malaise, and certainly for 2023, we've been in a tight trading range. Let's bring in Reid I'Anson, who is senior commodity economist at Kpler. I don't know, has boring become beautiful for you as somebody who has experienced a lot of volatility with oil? You know, we're just kind of bouncing around here with $80 as kind of a firm lid on prices.
Yeah, to be honest with you, we're kind of maintaining through the end of this year a pretty tight price band between $80 and $90 per barrel. We do think that prices could probably rise over the next several months as the Chinese reopening story continues to play out. But through the second half of this year, we feel that prices are probably going to ease towards the lower end of this range expectation as high interest rates across a number of westernized economies really start to weigh on economic growth.
And so there's that story. And do you have a little asterisk for China? Because they seem to be going a different direction and, of course, a huge consumer and source of demand for energy.
Yeah, I mean, China is definitely going to be a source of demand this year. We have refinery runs up around 500 KBD year over year relative to 2022 levels. So we do expect a significant pickup. It is important to keep in mind that looking at Lunar New Year transport, for example, it was about half of pre-pandemic levels, right? So we still have a ways to go before Chinese demand is fully back in gear relative to normal pre-COVID levels. And so I think it is important to keep in mind that, yes, Chinese demand is coming back, but don't expect, right, a linear recovery. It's going to be bumpy. There are going to be ups and downs as we go through this process over the next several months. But I think definitely by the second half of this year, Chinese demand is probably going to be pretty strong.
So we look at prices in this tight band around $76 to $80. Is OPEC happy with that? Do they do anything to get higher prices?
No, I think they're happy with that. That 80 to 90 range is, you know, a good sweet spot for producers and consumers. You don't see a lot of demand destruction on either side of the ledger. And so I think OPEC's going to kind of be quite happy with that price band for sure.
Where's the wild card, do you think?
Obviously, the wild card continues to be Russia. Our expectation is that for the most part, you know, on the oil side of things, exports are going to continue to maintain at consistent levels. There's plenty of willingness out of places like China and India to continue pulling volumes. But with that being said, you have a war going on in Europe, and that is always a wild card. But at this point, we foresee Russian flows, especially again on the oil side, maintaining at pretty consistent levels.